So HSBC sees signs of stabilisation in China. Do you agree? And what are the implications? Good morning.
Well, it's very interesting. It comes straight after the official PMI showing a bounce as well. It suggests to me, with one or two other marginal indications, that certainly the speed of the slowdown that was accelerating through Q4 and early Q1 has stopped, and maybe we're starting to see some modest pickup. And if you look at what I've regarded as pretty good leading indicators of the Chinese cycle for a long time, in particular an index of Chinese financial conditions which have eased a lot the past few months, it would make sense, unless of course you were in the camp that the Chinese authorities have lost control of their own financial conditions, which I'm not. So yeah, I think there's probably some evidence that the Chinese economy is stabilising, and it looks to me as though they will be on course for getting close to the 7.5% they talked about at the start of the year for the year.
So you don't think there's some suggestion this morning that we could, on the back of these numbers, see further stimulus coming through? We've already seen the currency down a little bit. That's clearly having an effect on the exporters. Is there any need for further stimulus based on the tentative stabilisation that we're talking about here?
I think they're only going to play around at the margins. I think from the comments we're seeing from the highest levels of leadership, the kind of measures they undertook back in 08-09, so big stimuli, are off the agenda. So I think we're sort of generally in the fine-tuning category. By coincidence, I happened to be at another event here in London yesterday, which was a big British-China business gathering with a very large number of Chinese visitors here from top levels of government, but in particular Chinese private business. I know some of them reasonably well, others not so, but I get the general feeling that, contrary to the mood in the markets, people think that China's travelling in generally the right direction, which, as I say, is interesting because, of course, the market mood has been so sceptical. But I suspect, as is often the case, the market gets far too carried away about China in both directions.
Jim, we thought it was only fair if we sort of moved you around the bricks, as you are credited with coining the phrase. So the next stop, I suppose, is China. Modi obviously has just been elected there. A lot of people are saying he's going to need a miracle, but if anybody can do it, it's him. How does the Modi victory change your outlook for India's economy?
Well, I'm very excited about it. This time a year ago, I had the pleasure of meeting him. I went to Gujarat to meet him and his team to discuss their economic policies. It was quite clear to me that in what I thought at the time was the perhaps unlikely event that he'd win, if he had a big enough mandate to genuinely lead, this could be a really big thing for India. So I think the size of his majority puts India in a position that it's not been in for over 30 years. So, and he sort of dines out on this minimum government, maximum governance, and he's got a mandate to try and deliver that. And as you said in your question, there's so many underlying issues in India to deal with and get through, but I think he's got a pretty good mandate, and at a minimum, I think he's going to be clearing some of the hurdles for investment. I would imagine a number of initiatives to boost FDI as well. And I think we're probably in the early stages of many sell-side analysts revising higher their Indian growth forecasts. And I find myself thinking, with him in power, for the second half of the decade, India could possibly grow by more than China. Because the long-term demographics are, of course, still there. It's just that they've had pretty ineffective economic policy for much of the past 5 to 6 years. But they've still managed to do okay despite that, but now they're in a position to accelerate quite a bit. So I'd put myself very much in the bullish camp on India.
A significant re-rating. Jim, a lot already priced in when it comes to the ECB this week. We're expecting the rate corridor to pretty much stay the same, the refi rate to come down. We're expecting a negative deposit rate. The key question on everybody's mind seems to be how quickly the ECB and Dr. Carney as well at the Bank of England can move the sort of the international community when it comes to ABSs. What does the ECB need to do to actually have a meaningful impact on the European economy when it makes its announcements on Thursday?
Well, it's pretty funny, Guy, you're asking me that question. I'm stood about 20 yards away from where Mario Draghi made his infamous comment just before the Olympics in summer nearly 2 years ago that he'll do whatever it takes. And I remember thinking as soon as those words came out of his mouth, because I was sat very closely, that was a big moment. And having spent some time with him, of course, in our both previous lives, I think he's a savvier human being than many tend to give him credit for. So I don't think he will have gone into this thinking that he's set the markets up for disappointment. So I think this meeting on Thursday is going to be interesting, and I would imagine at the margin, quite what I don't know, there might be a bit further of a surprise from the ECB, because he's a canny operator, as proven by what he said in this building nearly 2 years ago and its impact subsequently.
So you think there's still scope for him to surprise the markets, even though expectations have built up so high?
Well, obviously, if they just did a rate cut, then that would, I think, be now. Well, I mean, at this level of interest rates, it's meaningless anyhow in some ways. But I'm assuming that some kind of credit easing where they commit to supporting the purchase of or making it easier to buy credit. I think something like that might happen. But I would imagine he might say quite a lot about their inflation forecast in the context of the Euro's level. Because what he really needs to do is to create this sort of circular thing that they're going to get their inflation target back only and when the euro stops rising and starts to decline. So that would be the thing that he really needs to get in motion and to encourage the markets to do it for him, just like his powerful comments did when he talked about doing whatever is necessary or whatever it takes, where of course he never actually did anything other than just persuade the markets to believe him.
Yeah, I like to call that his bumblebee speech, but anyway. Jim, just finally, got to wrap it up. I know you're a keen follower of football.
What do you call it? A bumblebee speech?
Bumblebee. He talks about the fact that the bumblebee shouldn't fly. I remember him talking about it quite vividly.
Oh, yeah.
Who else is in the final? Who else is in the final in Brazil, other than Brazil?
Well, I in my role as writing for you guys occasionally, I've got the pleasure of starting off a special thing on it, I think starting Sunday coming up, where I'll be writing an intro including my own tips for the for the semi-finalists. I learned many years ago to stop predicting the winner because it results in the president of that country coming chasing me wherever I am in the world. So I'm not going that far, but your listeners and readers will have to wait till Sunday to see what I'm saying.
I was hoping you were going to say that. A nice little tease. Jim O'Neill, thank you very much indeed. Jim O'Neill joining us from the Chatham House event.